Yeah. Hi guys, this is Simon with Trade and Perform Coaching, doing the end of day session for both the review of the homework and the end of day trade review. End of day trade review. So let's kind of jump in and get started. So first of all, let's go through the homework questions and then we'll do the trade review. That's usually the easiest way to do it. As always, trading is a very risky and a aggressive venture. You can lose all your money trading futures. Okay, there are obviously never any guarantees of performance, past or present, and these are not trading recommendations. Very important that you realize that. Please consult with your broker. Make sure that futures trading is appropriate for you. So now let's jump in with the first homework. What I wanted. Question, there we go. So first question, pretty easy. Define the current range. Okay, well, let's pull up a blank chart. And again, the point of doing the homework day by day is so that you are clear and understand exactly where you're at by the time you walk in the following morning, right? Pretty easy concept. The more familiarity you have with both zooming in and out on bigger picture to smaller picture, the easier trading becomes. Okay, so we'll look at a 5-minute chart. And we can clearly see top of the range was yesterday's high at 26.25. I'm going to go with current bottom of the range, the most immediate, being this 2083, and with this open gap sitting here at 2105.50 being essentially the midpoint, right? So what have we done at this point? I pointed out yesterday in the homework that if we, and let me mute everybody. There we go. That based on this gap here, right, that we would do at least a 50-60 retrace. Okay, and we haven't quite hit it. And of course, we have the wild card of having Apple's earnings come in overnight. But this was obviously a good area to target for the first downside move. It didn't quite get down to the 2105.50, but it came darn close. So I defined the current bottom of the range, 2083, top of the range, 2126, and obviously the extended portion of the range comes down to 2070, and below 2070, the very bottom of the range would be the 2030 lows that we had from the night we gapped down in Greece. Okay, with the Greece deciding to quote unquote default, right? Okay, so top of the range, 2126, and areas above, because obviously if we have a daily range potential of 20 to 30 points, that would hit 2142 as a very peak in terms of extension to the upside, to the downside, based on, well, heck, who knows where we'll actually close, but the 2113 we take out to 30 points, and that would put us at roughly 2080 on the downside, right? Or right down to the bottom of this open window. So that defines the range. What was today's first hour range and first half hour range? Okay, so if we look at that, zoom that in, go to the end. There we go. So first half hour range, mark that out, 9 a.m. So it looks like we ranged basically from 21.5 down to about 21.18. That's about 3.5 points of range, right? Now, this is very important. That's a contraction, not an expansion in range. And I generally would not, that told us a couple of things right out of the gate, right? So we'll kind of combine trade review with, we'll combine the concept of trade review with the homework questions, right? So when the range contracts like it does, the first thing that I expect in my trading is that we're going to have some sort of balanced day. It's going to, if it's down day, I expect it's going to look like this. The next thing, and it's a big heads up, okay, it made a big difference in the trading for everybody, right? There's two things. There's what rotation we expect. That's the move from point A to point B on the day. Whether that's 10 points, 20 points, doesn't matter. The next question is a question of price action within the day's rotation. A healthy market, and I covered that, I touched on it this morning. I'll go over it again right now. Okay, is a market where I expect, let's say we have in the first half hour a 10-point rotation. Well, if that action is like this, and the counter rotations from point A to point B or only 1.5 points. That means I have almost zero chance of making any money on a counter trade. As a matter of fact, I'm just going to get run over on the way there. Conversely, let's say I have a 7-point rotation. It goes from here to here, right? But that path to that 7-point rotation opens like this, pushes up like this, comes down like this, pushes in like this, pushes down like that, and comes down like this. Which is more important to me, the 10-point rotation or the price action? If you are a day trader and you're trading contra and ES, the price action is important. Quickly identifying when you have a 3-point range that the likelihood of getting 3- and 4-point counter rotations is very, very low. What's the other thing that I pointed out in this morning's homework that goes along with measuring the first hour and half-hour range? And let's go look at the first half hour really quick to expand that out. I'm going to try and stay up here on time so I can finish at 10 after. So if we look, no expansion in range. Not only that, but the price action is affirming, right? Price action is affirming low, high. Oh, excuse me, I didn't mean to do that. Let's get rid of that. Low, high. Push to new high, back in the middle of the range. Push to new low, push back in. Little to no increase in range. Okay, and importantly, lack of counter rotation back to the upside. Now, the natural question to that is, but Simon, the downside seems to be working really nicely here, right? We basically came into gap fill and pushed down. That's super. Well, the requirements we had coming into the day was that we were one time into the upside, and the first thing I had to see was that we would, excuse me, that we would trade below, right? Trade below and trade below the prior day's low. This had not occurred at this point. I am not aggressive on the short side here. The next question is, who gets upset when they miss a trade like this, right? And I'm going to jump on the psychological part. People who get upset about missing the trade here, or people who caught this trade, were the same people who've been, for the most part, that have been trying to short every single day for the last 10 trading days and been getting absolutely run over. No one cares about this if you've been long through here or if you're getting stopped on your first day of what turned out to be a breaking of one timing to the upside, right? Let's go to the next question. Obviously, what was the day's range? Greatest move up, greatest move down. So the range was from 2021 at 50. The low was, I believe, 2108. Let me look here. $21.08 even. So that's 08 to 10, 1150, 13.5 points. And that is an expansion, worth noting. It's an expansion in the range. Greatest rotation down was from 2021.50 all the way down to 21.08. It beat it by miles. That's a what? 12. Let's see, 11.5, 13.5 point rotation down. The best rotation up was from 21.08 to 21.14, which was 6 points up. Okay, so we got that covered down. How many days up, down? So this is the first truly down day that we've had in ES in a long, long time. 2 weeks, and we're minus 9.25 on the day. No significant damage. We're still above the open gap that's sitting at 21.0450. Okay, so was NYC tick showing balance or directional move? NYC tick was balanced all day long. I don't think we ever broke out of that balance. I'm going to look right now just to make sure what I speak. But if we look over here, I'll move it over really quickly. Let's erase my beautiful artwork. Can't take all of this too totally seriously. Okay, so I want to try and expand this all day long. From the open to the close, all the wicks on the candles, all right, all the wicks were wicking above 600 or below 600, but all the meat was primarily plus or minus 600. Obviously, the ticks were balanced to the negative side for everything after the first hour. We were balanced to the negative side. The PA reflected that as we rolled to the downside, but not massively. It wasn't anything. It was not anything terrible. At the end of the day, it was just simply a. It turned out to be a balanced day. And then what's the note that I put out here at the end of the day regarding this. This is very important. Tick stayed in balance all day, and I drew this picture out. I'm going to draw it again. What is the way balanced days tend to work? And I drew this picture in the morning. I'll draw it again. New low, push up, new low, push up, and then finally we push to a new low, and then we make an attempt to push back into what is the middle of the range. Okay, let's go see what kind of picture we got today out of the market. Screen, audio. Erase. I don't understand why they just don't throw an erase button out here. There we go. Okay, so if we look at this, did we follow that pattern or any semblance of that pattern? Open, push up, gap fill, push to a new high, push in, push to a new low, attempt to push back up, break, right? And it was slow and grindy through here, right? And we actually happened to pick off, we were in all of this, we were able to pick off 2 trades, given we didn't get huge rotations off of them, but we were able to pick off 2 trades. Finally, so push up, push down, rotation down, no attempt back at the middle, unless you consider this. So this became the middle of the channel, right? So each time we pushed down to the bottom of the channel, we pushed back to the middle, because this became balanced with a downside bias. I hope everyone can see that, right? And then what did I say about these balance days, right? They go like this, like this, then finally push down, and then we hook back up into the middle. Well, if you look, let's call it 21.22 is a high, 21.08 is a low. That's 14 points. So the halfway point from the low would be 7 points, which would be 21.15 would be the midpoint, and we're trading at 21.13, 1 point shy of that midpoint. It's very important to remember, and I was talking about this at the end of the day, do not get bearish down here at the end of the day. And can you just imagine everyone who was like, dude, we can't bounce. I'm convinced we're going to the low. Because you know the reason I know that? Because I used to think like that. Every emotional trader in the world thought we were going to break to the low. They're all getting squeezed right here at the end of the day. We have Apple's numbers coming out. It wouldn't shock me to see this close above 21.16 right there on the close if they can make enough push where people panic and close right into the end of the day. And that brings us to a 50-60 retrace. We may get it after Apple's numbers, right? Let's go to the next question. We are no longer one-timing on the day time frame. And yes, I don't think we broke the low on NQ. We might tonight based on how they treat Apple's numbers. Let's go look really quick. Okay. NQ got below Globex low. Lost it. We failed to trade below prior day's low. We're still one-timing to the upside on NQ. Very, very, very important to remember, guys. Okay? So let's go to the next question here. Where are the open gaps above and below? Let's go look at the volume profile for that. I can tell you right now that 2104.50 is the most important open gap below in ES. Find this. Here, we'll just go to this. And no, let's use this one, maybe. There we go. Open gap, 2069. Open gap, 2104.25, and maybe 0450. They switch a little bit between the 5-minute chart and the volume profile. Open gap was closed on the top side, so there's no top side open gap. Year-to-date high, sitting right here at 2126.25. The other important areas on this chart that are worth noting are now, obviously today's low, because today's low now is the bottom of the top of the open window, which is 2107.75 or 2108, and then 2104.25 is the open gap, still a valid area. There's another open window right here at 2083. That is an important area. The other thing I want to look at that's important on this is where are the 50-60s. So if we stretch that out, I measure the 50-60s from two areas. 50-60 on the last significant gap up. I don't consider this a significant gap. I consider this one was the one that broke us, right? So that puts us right there at 2100 to 2106. 50 retrace is 2106 and a quarter. 2100 is a 62 retrace. The open gap is sitting at 2104 to 2104.50, depending on where you measured the close. Okay, hold on a second here. And by the way, we're sitting just underneath that 2116, and short's got 3 minutes to cover. So, wow, I'm just glad I'm not short. That's all I can say, especially at the end of the day. And then the larger 50-60 retrace, which I would have marked off on your charts. Okay, and that puts us at a 50-60 at 2061 and a quarter. That's in the middle of an unauctioned area. I would still expect a response there because so many people watch the 50 retrace, but still it lowers the odds because it's in an auctioned area. And then very much the 62 retrace is sitting at 2070. 2069 is the open gap. I would expect a response of buy here. I do not think it's bearish unless we get below and hold below 2069, or unless we gap below 2104. We backside test it and it pushes us down. The market is still in bullish mode. There's no reason to think otherwise for any reason at all, at least in my most humble of opinions, right? So that's kind of how I look at it. And then lastly, let's go to the next question. Where's the 200-day moving average? It's way the heck down here in the 2060 neighborhood. Not even an issue right now. We're well above it. What type of price action did the market display during the first hour? Did the price action change at any point? Actually, it didn't. It was slow, grinding, and directional. We want to see those two-way whips, and we would like to see that evidence early in the day. It makes life a lot easier on us. If the market was in balance, we already covered that. What part of the day had the larger range? Obviously, from the morning till right past New York lunch was the larger range to the downside. Okay, so finally, mental review. And then I'm going to jump in real quick and look at how the zones actually performed one-on-one. Did I have my written trade plan out on the desk while trading? I can't stress how important this is, guys. Every single day, have your trade plan out for you. It makes it easy to not get emotional about your trading. Did you follow your own rules for entry, exit, and stop? I did. Did I trade after exceeding my maximum stop loss? Wasn't an issue for me today. Did I feel frustrated any part of the trading day? Answer, yes. I will answer that question gladly. This PA right here, this price action where we cannot get significant rotations up out of the zone and I try to press my trades and I can't get my trailers to move, is frustrating, folks. No question about it. Hands down, frustrating as hell. Please don't pretend like it's not. The key is not to frustrate yourself into trading losses, okay? So the last part that I want to cover, did I judge my performance based on the amount of P&L or following my setup? I thought I followed my setup really, really well, and I want to step through this really quick. Then we're going to kill it and let everyone enjoy the afternoon. First move, my first trade was an aggressive long right here at 21.1850. I got the long to the upside. Next was the next trade, right? We have sat here. Let's see what color that is. This zone out of the open was already tested. Not only was it tested, this is first touch, second touch. Next touch trades to the zone, falls through. That's why we focus on the first touch of the zone, folks, so you don't get caught on the second touch and have it break through, right? Next touch of the zone, 21.1450, I took right at the top of the zone. I got a rotation up for 1 point. That point you can choose to leave your stop as is, which was 2 points behind the zone originally. Move your stop to break even, net break even, or close the trade after 20 minutes. 20 minutes in the zone was 5, 10, 15, 20, and that would have saved you from taking a complete 4-point stop, and you were able to get one 1-point scale out of the zone. The lack of rotation is what prompted me to take the 1-point scale. I normally shoot for 2 points. Next zone, I took the first touch of 21.1175. If you look from this point, right, we only spent 10 minutes in the zone. It rotates all the way up to 21.1350. I don't think anyone could have gotten a fill the first time at 13.75, but the second time through, notice if you just moved your stop after 20 minutes to the swing low, you were able to get that second scale. So one scale for 1 point, one scale for 2 points, and at that point on that second scale, you can either choose to move your stop to break even, to net break even, or to leave the stop as is. I left for lunch. I moved my stop to break even, made money on that trade. Then finally, I came back and I pointed out, and I put it on the Twitter stream that oh, and I know I said it in the room as well, that I was getting a long buy signal right in, I want to say right here at 2110, 2110.50, right? And I also noted we could still break to the zone below, push back in. And guys, I covered this trap. I've covered this trade every day. I get a swing long signal, I get a push to a new low, then I get a bar that closes back in. My entry, my highest odds entry on that swing long is this bar right here. My stop goes 1 to 2 points below this swing low. Now look at that entry, 2110.50, and eventually before the end of the day we rotate all the way up to 2115.50. That's a 5-point trade, give or take, right? So I don't have much more to comment on that other than if you read the price action well, which I thought we did a good job on, we didn't overcommit at any zone. The 20-minute rule, which this has been the first time on the long side in a long time we've had to enact that. 20-minute rule kept you safe. First touch of the zones gave you a rotation each time. And remember, this zone's 2107.75. Remember, single points of zones are plus or minus 1 point to the upside, and gave you a beautiful entry. And this is exactly what I'm talking about. We had the swing long triggered. This is the zone below. First touch in, that's one of the highest odds entry besides the actual trap itself, right? So you either took this from 2108.75, trapped in, you still got your 2-point scale and a chance to push it all the way to 2115. If you had been patient and you didn't get aggravated with your trailers getting stopped up here or the small rotations, you set yourself up for winning. And also, if you look at the size of the rotation down, that's a big rotation given the context of the market right now. You set yourself up for a nice trade to the upside. All it took was a little bit of patience. This took a long time after I posted this trade setup. Took a long time to set up. And also the last piece, don't get bearish at the end of the day. The sellers get trapped and they are forced to come in and cover. Also, this is healthy for the market given the run-up that we've had. The pullback, I would not be getting bearish here. NQ is still the trade below prior day's low. It's one time to the upside. That is now the canary in the coal mine to change the true nature of both markets at this point. So let's see where we're at. We are due a pullback to both those open gaps below our natural targets lower, but the price action in my eyes still is not bearish, particularly when we're getting hooks like this. And remember guys, when I come in, even though I post this to the general public, this is aimed towards the guys in the room. Open, push up, push down, close. This is exactly what this is right here. Mirror image, print it up, burn it into your mind, because this happens most of the time. The closes where we get closes on the low of the day, extremely rare. Save your dollars, save your energy, and if you can, turn that into making some profit. So anyways, guys, that's what I got. My name is Simon. I'm with Trade and Perform Coaching. Thank you all for joining, and we'll see you all tomorrow. Have a good night, guys.